Markets have had a really good run so far this week, and actually think we're going to see more of that. Look, all this hype overnight about the US market being down, the Dow Jones was down 0.1%. Basically, it oscillated, consolidated about around the strong gains it had made the previous 1 or 2 days. You know, we were expecting this good week, this good bullish strong week to develop. Any dip in the Australian market today is complete nonsense. Get in there and buy it. You know, we saw Apple sold, the 2 stories in the US were Apple being sold off. Well, you know, the company's just reported a 78% jump in earnings, so it's going to be doing better later in the week as well and into next week. People, you know, saying Goldman Sachs on, you know, another profit downgrade. Well, you know, that's Goldman Sachs, that's America. We're in Australia. I mean, really, you know, if you're going to look for the Goldman Sachs of Australia at the moment, I'd look at something like Fortescue. You have a look at their share price. It just tells you what's going on in the world in terms of demand for our commodities and where the Australian economy is going in terms of exports. At least blue skies. I keep saying it, blue skies. All week I've said it was a dip to buy. You know, if there's another dip today, just get in there and take it higher. The Australian dollar had the strong rally we were looking for. Oil hasn't had the strong rally we were looking for, but it's still consolidating around current levels. And there was some silly report I saw today, you know, oil was sold off because US housing starts were disappointing. I'm sorry, the connection? Oil is very much about the story of increased demand in China and India, as we've said before. Also, housing starts in the US being flat over the last year. Well, what do you expect? I mean, they've got enormous stock. You know, there's still the 6-bedroom homes in the estates outside Las Vegas and other US cities and locations, and they can't sell them for $300,000. You know, whole estates empty with a boom gate and a security guard at the front. So new housing starts, they're not going to recover for a couple of years still. So don't get spooked by that sort of data. Also, the market was spooked overnight because the United Kingdom had a increase in unemployment or jobless claims of 49,000. But you know, as I've said before, this is a jobless recovery in the Western, mature economies. The real economic growth, the real story, still very much Latin America, China, Asia, even a little bit of Western Europe, Eastern Europe starting to take off now. I still think we're going to have strong economic numbers, strong corporate earnings across the globe, increased industrial demand. Still, the outlook is all very positive. So I guess all my message today is just to reassure that the outlook remains just as positive as it was at the start of the week. When we were bullish at the start of the week, people were selling. We're bullish today, people are selling. It's another dip to buy. As I said, the ASX SP 200 is probably headed to 5,000 within days, if not weeks, and it's time to get on board. Those resource stocks just continue to point the way. The Australian dollar is still very cheap here at parity. It's going 103, 108 this year, and any profit suffering for resource companies as a result of the higher Australian dollar is going to be more than offset by higher commodity prices. So despite any doom and gloom spin doctors out there today, it's still a buy market.